So especially as the second quarter earnings just got released, there is a ton of insane stuff happening to Workhorse Group stock again, being down about 43%, however, since the recent highs. These occurred after spiking the astonishing 7,800% at the beginning of the year, marking another 125% gain as a result of dropping back to under 8% from the first squeeze. So what we are going to do today is give you an insight into what is actually happening to Workhorse Group stock and the just released earnings report, as well as break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Before we jump right in, however, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. And in the case of Workhorse, we're essentially looking at an especially amongst investors extremely popular delivery car manufacturer, developing and building some incredible electric vehicle vans with a ton of crazy technology built in, allowing for notably higher cargo space as well as smart systems that always know where each van is. Before we get more in depth into what is currently happening to the company, however, and go through some key aspects that are pretty important to know about Workhorse right now, we definitely have to start with the biggest story today, the new earnings report released on Monday. And comparing it to the second quarter of last year, there are some major improvements we quickly have to take a look at, starting off with a whopping 1,300% increase in sales, with 14 trucks bringing in a total of $1.2 million, which is a ton compared to the single truck delivered in 2020 for just $92,000. This huge increase in the volume of sold trucks also explains the large cost of goods sitting at $14.5 million, also a lot up against the just $1.5 million last year. And although the company still is not profitable, it was able to reduce its net loss by more than 50% as well. However, following the significant jumps in January, and this is crucial to consider for our prediction at the end, the stock has been somewhat consistently heading down. But Workhorse definitely wasn't the only major EV company to take a pullback a bit at the time, with even big names like Tesla doing so as well. However, in addition to the sector's bearishness, Workhorse, for example, also lost out on a major postal contract to Oshkosh Defense in late February, contributing significantly to the stock's drop. So the tremendous hype from retail traders is the reason for the stock's rebound of almost 130%. And because the stock has been mentioned massively on forums like Wall Street Bets and in videos like this one, tons of people have forced short sellers to cover their positions, causing the price to climb to the January highs. But making such a short squeeze work basically comes down to just one thing: the short interest, which has actually risen a lot again, while the stock has been pulling back. And, as it's also going down right now, short interest is reaching higher levels once more, making a new short squeeze pretty likely again. But although we've actually seen some massive increases here compared to last year, the most critical thing for Workhorse right now are new orders that are, especially considering the small size of the company, still pretty low right now. But this small size might also be a one-of-a-kind opportunity to profit from the long-term growth of the electric car industry without having to invest in some overbought stocks. Furthermore, as e-commerce continues to grow at an astonishing speed, investors are desperately searching for methods to harness and capitalize from the resulting boom in logistics and distribution. And it appears that doing so via an EV option is a good idea. However, if you're looking to buy for the short term, you should acknowledge the stock's recent volatility and big price fluctuations. Considering the massive progress Workhorse continues to make, however, as we can see in the recent second quarter earnings report, for example, this shouldn't be too much of a problem. Moreover, if we continue to see the massive hype from retail traders and short interest remains rising, another short squeeze is not as unlikely as it may look. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.